Hello, everybody. My name is Charles Specht, and I am the president and CEO of Permission Network Insurance Agency, where we teach insurance producers how to build a $1 million book of business through signed broker of record letters. In today's video, I want to talk to you about having an abundance mindset when it comes to the types of accounts that you're going to prospect. And with regards to that, what I mean is that you need to start thinking bigger. Thinking small is going to get you small, tiny results. Thinking bigger is going to actually put some money in your account. Now, here's the thing. There's lots of accounts out there that you can actually prospect. But really, are you prospecting the types of accounts that are going to actually put you in the financial position that you want going forward? I speak to a lot of different agents, and frankly, it's interesting because everyone's book of business is different. I mean, it really is. I have some clients where they have about a dozen clients and they're close to about $1.5 million of commission. I have other clients where they've got 100 clients and they're only about $70,000 of commission, and they're all in between. Books of business everywhere. But here's the thing. Let's say you have a lot of clients that might be $1,000 to maybe $1,500 of total annual revenue for the account, whatever it's actually bringing in for you. Maybe you just write the workers' compensation. Maybe you write the auto and the property and the general liability, but you don't have the excess, you don't have the workers' comp. Maybe you only do the health benefits and you don't really even touch the property and casualty. Whatever it is, I want you to actually start looking at your book of business and then find out how much revenue per account are each of your clients bringing in for the most part. You have to come up with that number. Because let's say, for example, it's $1,500. Now, many insurance agencies have what's called a minimum revenue threshold. That is, they don't actually pay the producers for an account unless it achieves the minimum revenue threshold for the account. Their minimum annual revenue threshold might be $1,000. So if it's over $1,000 that the account brings in, they'll pay you your normal commission split. If it's only $600, then they don't pay you. They keep it as a house account. But most agencies have a minimum revenue threshold of something. It's typically, I would say, right around $2,500 is kind of a norm. Some go higher as $5,000, some are $7,500. I actually have one client over on the East Coast, and it's very interesting. The agency has a $25,000 minimum revenue threshold for the account. That is, if the account doesn't bring in $25,000 of commission in a year, they actually don't pay the producer. You know what that tells me? That you have to go after very big accounts. That agency has set themselves up so that they're going after very big accounts. And sometimes your agency might not have a minimum revenue threshold, but maybe you should. Let me say it again. Maybe you should. Maybe you should have a minimum revenue threshold. You have to decide, how much are you worth? Are you worth $1,000 for a year? Is that really what your minimum revenue threshold needs to be? I think that you're probably worth more than that. If you're really taking your career seriously, you probably realize that you want to be making more money. You know that you are worth making more money. You know that you understand the insurance business and the process, and you're going to provide the services that your clients need. You need to decide now, how much are you worth? How much? Because whatever that number is, that's the type of an account you should be prospecting. You shouldn't be spending time on the little things any longer, because you're going to then be just making nickels instead of bringing in hundreds of dollars. Don't be tripping over nickels when you should be going for the C notes instead. I really want you to understand this. Don't be tripping over nickels. Don't be stooping to pick up the nickels when you're passing up the C notes. Here's the thing. If you're going after accounts that are $1,500 of commission, and I'm not saying those aren't important accounts. I'm just saying they might not be the right accounts. But let's say you're doing the work for the 1,500 accounts. You still have to gather the loss runs. You still have to put together the submission. You still have to send it out to the markets. You still have to gather the quotes and negotiate with the underwriters. You have to put it in a proposal. You have to schedule the time to meet with the insured. You have to go over all of it. And then if you get it, you have to process certificates of insurance. You have to meet with them over the course of the year just to make sure that you're maintaining the relationship. You have to do work. But here's the thing. It's really not that much more work for an account that's $15,000 of commission than it is for an account that's only $1,500 of commission. It's not. I want to tell you again, It's not much more work. In fact, for some accounts, it might not be more work at all. But the issue is, are you going to do anything about it? I want you to do this one thing. Look at your book of business, decide what is the typical size for an account that you go after, and ask yourself, is that sustainable to get you the financial results that you want for yourself? Are you going to be able to make the amount of money that you want for yourself going after those types of accounts? Or are you going to start 12xing your mindset and start going after stuff that is 12 times bigger, even by getting one broker of record letter per month, but you're going to 12x the size of account that you go after? I wonder, are you going to do it?